Attention, all curious minds, innovators, and trendsetters. It's time to pause, lean in, and get ready for an extraordinary journey as we dive deep into the fascinating realms of life, technology, entertainment, and business. Let's explore, learn, and grow together. Brace yourselves, for the next thrilling episodes of Hipther Talks is about to take off. Counting down from 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And here we go.
Hi everyone, Zoltan here. We're back again this week with the Hipther Talks, and we're sticking to the serious note of things, because today we are going to delve into the European Union's AML package, and of course, I'm very honored to have here Manfred Galdes, the current managing partner at ARQ Group. Hi Manfred, it's nice to have you here.
Hi, great to be with you, Zoltan.
All right, so before we dive into the questions, we have this tradition here that we like to give our guest the opportunity to say a few words about himself and, of course, their career, and, of course, pronounce the company names correctly. So, Manfred, tell us a bit about yourself.
Okay, so as you introduced, my name is Manfred. I'm a lawyer by profession. I've been working in the area of compliance, particularly financial crime compliance, for quite a few years now, over 20 years. I hate to admit it. I was a director of the FI, which is the Maltese regulator, for 8 years. I worked as a lawyer in compliance. I advise a number of entities, gaming companies, gambling companies, financial institutions. I'm also the chair of the second largest bank in Malta. So I'm involved in various aspects of financial services and advisory work with gambling services. So that's me.
All right. So that's enough, actually, for our audience to know that the theme of this episode is very serious.
And you mentioned the entity that is ARQ Group, which I'm the managing partner of. We provide advisory services in terms of licensing, etc., within both the financial services and gaming compliance areas. And we do a lot of work with gambling companies in strengthening their anti-money laundering framework, training, offshoring services. So we do quite a bit in this space.
All right. So as a first question, my first question would be, can you maybe start by giving us an overview of the new EU AML package, which was adopted on the 30th of May this year, and maybe talk about the main objectives?
Yes, so we've been hearing about this package for a number of years. So we've been hearing since July 2020, I believe, is when it was introduced as the new package, and it's been negotiated over this 4-year period in various stages. Now, what we have is a new anti-money laundering regulation. So for the first time, we actually have a regulation and not just directives regulating EU framework. We have, since 1991, had a series of directives, and we have a 6th directive as part of this package. But the main innovation is that we have a regulation. And for the non-lawyers, that means that this is directly applicable, right? Just like we have in data protection, we have a law that applies across the EU that doesn't need domestic law to implement it. It actually comes into force, and within a time frame, in this case, it's 3 years, it becomes directly applicable across all of the EU in the same way, in a harmonized fashion. So that is the biggest novelty. So the package has a regulation, it has a directive that also is, which is not of particular interest, direct interest to gambling companies, a funds transfer regulation that brings crypto asset service providers on the same footing as banks and payment institutions. And also there is the setting up of an anti-money laundering authority, which is a central authority within the EU now that has a regulatory purview and regulatory powers, which vary depending on the type of entity, and we can go into a bit more detail about that. But the big change is this harmonization aspect. So we have 3 years now from the 19th of June, you mentioned May, but then we had the actual publication in the official journal on the 19th of June. And now we have a 3-year period within which countries can domestically align their legislation and do all the preparatory work that needs to be carried out for the implementation to be able to take place.
All right. So yeah, it's good that you mentioned for the non-legal audience, because we do have many of those, and they like to learn a lot of new stuff, and this is something that has definitely catch their eyes, their ears and eyes about that. This is not just a directive. This is a legislation.
Yes. I mean, ultimately, here we have a big game changer also, because we have for the first time an authority, right, that is going to be supervising at a supranational level, which is, I think, the first region in Europe having this type of setup. And ultimately going to be, at least in the first phase, starting from 2026 onwards, 40 banks and financial institutions that are considered to be the highest risk and have cross-border operations being actually directly supervised by the Anti-Money Laundering Authority in Europe. But then we will also have, besides all this legislation that we've spoken about, also what are being called regulatory technical standards. So the more detailed rules and regulations are also going to be harmonized. So the requirements of AML now across the EU are going to be identical, whether you're in Sweden, whether you're in Cyprus, whether you're in Malta, whether you're in Estonia, and even the interpretation of those rules. So what we're expecting is a horizontal approach. So we're not going to have, at least what is being said so far, we're not going to have rules for gambling companies, rules for financial institutions, rules for the real estate sector, but we're going to have AML rules in a certain level of granularity, and they're speaking about 40 of these regulatory technical standards being issued by 2028, 2029, which would cover, as we said, horizontally, the various areas of AML, so customer due diligence, reporting, record keeping, screening, enhanced due diligence, all of that, but in a pretty detailed way, and in a harmonized way across all the European Union member countries.
All right, makes sense. How do you foresee that these new EU AML regulations are going to impact the gambling sector?
Well, I mean, the gambling sector has now been subject to EU AML requirements since 1st January 2018.
Yeah.
Right? With the 40 EU directive. In some countries it came a bit before, in some countries it came a bit after because of the dates of the transposition of the 4th directive and then amendments with the 5th directive. So since more or less that period, okay, a lot has had to be done. So in these past 6 years, the gaming companies have had to catch up with all the other sectors that have 20, 25, 30 years of experience in the AML sphere.
Yeah.
What the advantage that the gambling companies have had is that they're tech savvy and they could improve effectiveness pretty easily because they started at a stage where technology started to be important within the AML sphere. And so rather than having legacy issues like banks have had, in that how do you move from a manual system into a fully automated system, and that is what banks and financial institutions are still grappling with today. The gaming companies had the advantage of starting with the technology, and therefore they integrated the AML structures within existing technology and then started to utilize the more advanced systems and processes and onboarding processes with facial recognition immediately within their systems, whereas the banks are still struggling, especially the more traditional brick and mortar banks, are still struggling with getting to that new phase. Now, with this new legislation, I think there are quite a few novelties, right? And we can go into some specifics. I think, but the biggest change is, I would say, a positive one, because today most gambling companies have multiple licenses, and they have compliance teams that deal with the various different licenses, and they have different standards, and they have different approaches, whether they're dealing with their Spanish clients, whether they're dealing with their French clients, whether they're dealing with the Malta license, whether they're dealing with the Swedish license, etc. With more harmonization, the chances are that you onboard a client once, you have one set of processes, and this is going to apply whatever the license is. We don't know exactly how this is going to happen, but at least in theory, this is the great advantage of harmonization, right? So what has triggered the harmonization is the imbalance in the way that the European norms were being transposed in national laws. And what was described in certain EU documents as a race to the bottom rather than a race to the top, and countries actually lowering their standards to attract business. And now I'm speaking about gambling here, I'm speaking about all types of business. So harmonization was driven by the plan and the ulterior motive of raising standards. At the same time, harmonization has the advantage of standardization across the board, and therefore not having to adjust the rules, the norms, according to which operator license you're providing services under, which I think is a big change, hopefully in a positive sense for gambling companies.
All right. And I read that there's a 30,000 euro cash payment limit for operators somewhere included in that in those rules. So
30, right?
yeah, 3,000. Yeah. So what challenges do you anticipate for the gambling operators to comply with the new 3,000 euro cash payment limit?
Okay, so well, I mean, the rules are inherited from the previous legislation we have in terms of EU legislation. So the 2,000 limit that requires customer due diligence remains there. And this 3,000 euro cash limit comes and sits alongside, right, the 2,000 threshold for customer due diligence to be carried out. So we have a norm that says that at reaching the 2,000 in deposits, stakes, etc., and countries have interpreted that differently, and now we have more of a harmonization, you need to carry out full customer due diligence, which is either one transaction or a series of transactions. So it could be that I reach the 2,000 limit for non-customer due diligence gaming activity within 1 month, within 2 months, or within 5 minutes, right? Because I deposit 2,000 immediately, and therefore customer due diligence requirements come about. But now, sitting alongside that, there is a cash. I wouldn't call it a limit. It's not. It's actually a requirement for identification and verification.
A threshold.
A threshold, not a limit. Once you reach that threshold, you need to identify your customer and verify your customer, right? Now, typically, you would have already done this in your full customer due diligence process, because there's this 2,000 limit that is specific, 2,000 threshold that is specific for gaming companies. So in essence, for the remote gaming sector, I would say that this doesn't have any impact, especially because there is no cash transaction. For casinos, land-based casinos and land-based gaming, well, my feeling is that the same struggles that they have today will continue to apply, right? Because if I'm a land-based casino, I'm an entertainment center and not a financial institution. And there's always this big struggle of getting your customers to comply with what are requirements that have originated from financial services, right? So people go out for a nice evening and they end up, after the restaurant, going to a casino. They don't normally carry the passports with them necessarily. They don't necessarily bring with them proof of source of funds.
Yeah.
You don't carry your payslip with you to present. If you then go on a nice casino spree where you go into high stakes that exceed 3,000 in cash, right? So the requirement is to identify and verify. And that shouldn't be a problem because you slowly, people are already getting used to the need to identify themselves when they go to a casino in most jurisdictions. There are certain jurisdictions where these requirements are even stricter, but ultimately now across the EU, this is going to be a requirement. But the struggle remains the same. At what stage do I intervene? Now, most casinos are saying I do it at entry. The minute a person comes in, I obtain the information and I will make sure that whoever enters, even those that are just going to have a drink, have identified themselves and I verified their identity. If not, if they then decide to sit at a table and actually start getting involved in gambling activity, then you need to stop them at the 3,000 threshold and say, hey, I need your ID card, which is always the most practical way of doing things. And then if it's a high risk transaction, say, I need your source of wealth and source of funds, not just the declaration, but we need evidence. I mean, how do you do it in a gambling environment? That is always the biggest challenge, right? It's not a bank where you go in and you're opening a bank account and you expect certain questions to be asked.
All right. So about staying in the gambling operators sphere, this is probably going to be a pro bono tip for our audience. So how can gambling operators prepare for the implementation of the new AMLR and AMLD6 by, I think it's the limit is mid-2027, right?
Yes, we have a 3-year period. So now we had the publication on the 19th of June. So it's 3 years from then. So as you said, it's June 2027. So ultimately we have sufficient time because 3 years is sufficient time to prepare. And so I wouldn't expect everyone, to let go what they're doing and focus solely on this area. But time does fly. And the reality is that these rules will just come in with very little warning because, as we said, it's a regulation. It's already published. And it just comes into force, right? And from that day onwards, regulators will be applying these new norms. So there'll be the domestic regulator applying those norms because the Anti-Money Laundering Authority will be focusing on just a selected number of financial institutions. So ultimately, what will definitely need to happen is an upgrade of policies and procedures, training of staff, and new processes to meet the new requirements, the new thresholds. There are new reporting thresholds that are objective reporting thresholds. So there will definitely need to be tweaking to the current processes that are in place. And therefore, a certain level of preparation needs to take place as from now. Even more importantly, when the regulatory technical standards will be issued, right? Because we said these RTSs will be the more granular rules that will, to some extent, we don't know what extent, but they will change the norms across the EU in the granular, more nitty-gritty requirements of what document do I collect for identification, what document do I collect for verification. If I'm doing due diligence on a company, not an individual, what do I need to take into consideration? Who is the beneficial owner? What entities I can rely on, what entities I can't rely on, what due diligence I do on intermediaries, what due diligence I do on business introducers. This detail will all change. So we need to prepare ourselves for a certain level of standardization, even of forms, even of templates that we use for reporting to regulatory bodies, for reporting to financial intelligence unit. We already know that regulatory bodies are going to be harmonizing risk assessments, their own supervisory risk assessment. So what they will be requiring from us will be templated to some extent. I would advocate engagement with regulators. So trying to engage with the regulator to understand from now what the requirements are going to look like, so that there could be an element of preparation, which could vary, even though there's harmonization, but it could vary from one country to the other in terms of timeframes and supervisory expectations. I mean, the reality is that there has to be a certain level of preparation internally, because then there needs to be a preparation of the customer.
Yeah.
Because if the changes are going to be big, then the customer needs to be prepared for them, and this should not just be landing on their lap from one day to the next. So I would say a cautious and no need for panic approach, but ultimately it can't be left to the last year before actually coming into force.
All right, so act fast. There's the new legislation also includes the provisions for joint transaction monitoring by banks. So for those who don't know, maybe a joint transaction is, if I know correctly, typically refers to a business or financial operation that involves two or more parties who collaborate on achieving a common goal. So this collaboration can take several forms. So how do you see this affecting the gambling sector, and what benefits could it bring?
So this new EU package has taken a couple of bold steps, right? But maybe not as far as one would have hoped. Let's say that. Okay. So, well, this is always, there's always compromises. There's always ambitious approaches that don't always, get political consensus. One of the areas where the package has gone a bit further is in terms of group customer due diligence and the ability to exchange information within groups. So you can have now obliged entities, banks, financial institutions forming part of the same group, sharing more information among themselves. Okay, so they can also take into account information that they have from other parts of the group when carrying out customer due diligence and when carrying out transaction monitoring. So we have one bank and its subsidiary or another part of that group, which also has a banking license, exchanging information among themselves, or as you said, monitoring transactions and sharing the outcome of the transaction monitoring with each other. We also have an interesting Article 75 that encourages and actually sets out an enabling framework for more exchange of information in what we normally term private-public partnerships. There's an example in the UK, which is possibly one of the best examples, which is what they call the gimlet, where you have a number of banks that sit around the table with the regulator and exchange information on suspicious scenarios in what they call, as we said, a public-private partnership. And this was never really regulated at a regional level. And ultimately now with this new Article 75, there is an enabling framework for countries to take this type of approach, to rather have more of a proactive sort of participation by the obliged entity and not just wait for the FIU of the jurisdiction to actually go to the different entities and collect information from them, but also bring the participants round the table and discuss and encourage the sharing of information within a secure professional secrecy, banking secrecy, etc., data protection environment, where this type of information can be exchanged without breaches of any rules. So when we speak about joint transaction monitoring, I think it's not as far-reaching as one would anticipate, also because of these very strict data sharing limitations and secrecy, professional secrecy limitations that we find in various laws. But we all know that we all know when we reflect on the success or otherwise, right, of the AML provisions that have been with us for the past 30 years, that the most successful scenario would be if entities are actually allowed to share information and do joint efforts. And it's always been the law that has limited this type of approach. With the package, we're seeing more of a step in that direction. More allowing for exchange of information within groups, joint efforts within a group of companies, and also potentially public-private partnerships being developed within the jurisdictions concerned.
All right. So could you maybe share some potential impacts that these new data sharing provisions and on maybe its effect on the customer due diligence within the gambling industry would do?
Well, ultimately, I think it's more a question of us slowly now as us as consumers, right? We're all consumers. We're consumers of banking services, of gambling services. We're consumers in our different ways and in our different activities on a day-to-day basis, right? So we don't only wear our professional hats, we also wear our hats as consumers. I think as time goes by, the concept of this is private to me and nobody has an interest in knowing what I earn, how I earn it, where I have my funds invested, etc. Slowly, there's more transparency expectation to prevent financial crime and for no other reason. And so the big brother fear that we had 10 years ago has to some extent become a reality, because in order to access certain services, we have had and we are having to disclose a lot of information. So from a customer due diligence perspective, today we know that we can't engage in gambling activity without answering a number of questions. And the more we bet, and the more we get involved and the more we deposit in our account, the more intrusive those questions become. Now, the reality is that I can give permission only to you to process that data. Now, I can also give permission to you to start accessing other data of mine that I have shared with another institution. So if we take the example of open banking, I can give you as a gaming operator access to my bank account, right? So that I don't have to stay every time I increase my stakes or every time I make a deposit having to justify it, because I've actually given you access to my account. Now, technologically, that has become possible. So banks and payment institutions and other types of institutions can share that data if they have my permission as the ultimate customer. And the more I tick boxes, the more of that data can become accessible to the entity that I give permission to, right? But obviously, I can restrict what I am sharing. What does this mean? This means that we're entering an era in which a lot of my information that in the past used to be private becomes accessible to entities that can only use them for customer due diligence purposes. right? So what the EU package does is ensure that there are the safeguards, there are the mechanisms from a GDPR point of view, from a security risk perspective, because this information is sensitive. And if it becomes public, I am at risk in terms of my safety, the safety of my assets. So what's important is that we recognize that this is a new reality. And when we tick all these boxes and we as consumers share information, we know what we are giving access to and what rights we have. From a gaming company perspective, it's important, that the terms and conditions are looked at in more detail, because ultimately clients need to be told what information that they are sharing. If you look at AI today, if a company is feeding the information that I as a consumer have given to that company, to AI for customer due diligence purposes, I need to know that that is what the information is being also used for, right? And whether that AI is going to be used only for protective and detective purposes from an AML point of view, or if it's going to be used for marketing purposes as well, which takes us back to the old GDPR and data protection requirements that make sure that information is only used for the purpose for which it is collected. So that transparency between the provider and the data processor and the ultimate consumer obviously becomes key. Obviously, we can talk about this for ages, but I know we have time limitations.
All right. Yeah, we can extend the time. It's not a problem. Also, I'm interested, since you have your background as director at the Financial Intelligence Analysis Unit, what insights could you share about the importance of these new regulations for preventing money laundering in the gambling industry? Because we all know the gambling industry is always scrutinized of being part of money laundering schemes, etc. But yeah, since there are rules about it, it may be time that people start moving on.
No, and this is something that started in 2015, right? So
yes,
with the Ford Directive, and as we said, it was implemented in 2017, 2018 in most jurisdictions. Ultimately, from a free-for-all sort of environment, the gambling industry has become much more regulated. There's a higher level of supervision. I think there still are cowboys in the industry, looking for lower level of regulation in certain jurisdictions, because ultimately regulation has its limitations. It has its limitation, it imposes certain limits, and ultimately, if there are industries or if there are segments of the industry that are regulated to a lower level, then it becomes more difficult to compete. So the EU has taken a stance saying, well, this is the benchmark for EU legislation. But we have also had, as I said earlier, different countries taking different approaches, standards being different in different countries. So to me, the biggest change, as I said earlier, is the standardization. Okay, so besides the centralization in supervision, okay, which is not going to affect gaming companies as much as it's going to affect financial institutions, but you're going to have a harmonization of supervisory practices. So the supervisors in the different countries are going to have a set of standards that have to be met. The rules are going to be the same across the EU, and sort of the message that is being sent is that, it's a high benchmark, it's a high standard. Okay, so crypto asset service providers, are also seeing that there's going to be a high level of regulation. Thresholds have been set; they've been treated the same as payment institutions. So what happened in the gaming industry in between 2015 and 2018 happened to crypto service providers in 2021, 2022, and now even more so with this EU package and the changes in the FATF recommendations. So ultimately, with the inclusion of all these new norms and all these new requirements, there's also the raising of the standard and also the respectability of the sector. So if now you are treated into this and regulated in the same way as a financial institution, in the same way that a bank is treated, and the standards that you ought to reach and you are expected to reach, and the level of supervision is the same as that of a bank, the respectability of the sector, okay, is going to be, the level of respectability is going to be raised as well. So what was regarded, as a high-risk area, and every, international report on the risk of the gaming sector, whether it's the supranational risk assessment of the EU or other risk assessments that have been published by Moneyval and other international bodies, have always underscored the fact that the gambling industry is high risk from a money laundering and terrorism financing perspective. If the level of supervision increases, then from a residual risk perspective, the residual risk goes down. And we've already seen that in certain national risk assessments.
Yeah.
Okay, so when we examine national risk assessments that before used to rate the gambling sector as high risk, because the level of supervision has gone up and the bad actors have been weeded out, then the residual risk slowly started to go down. And that will be a positive when it comes to seeing how, parliaments legislate, because a lot of the pressure comes from lobby groups, consumer lobby groups, safer gambling lobby groups, anti-financial crime lobby groups, and obviously legislators as well, thinking about, the well-being of the constituents.
All right. So as a closing question, I would like to ask you about how do you think the new AML package will influence the global reputation of the EU's regulatory framework on combating money laundering and financing terrorism, because this is also part of it?
So the EU has been now for the past, I would say, 10 years, taking an approach that where it needs to go to be stricter than the international standards and the FATF standards, it's ready to do so.
I think in every side of things, yes, not just the financial.
Yes, exactly. So in the past 10 years, this has also happened within the anti-financial crime space as well. So this element of we can be stricter if we choose to do so. And the biggest example was the beneficial owner register, which was not a requirement in the under the FATF standards, but the EU decided to go all the way. And now there is an international push, even we're seeing it in the US, in Canada, for beneficial owner registers to come about. So that clearly is the stance of the EU. The same with gambling. So whereas before it was only casinos that required scrutiny and customer due diligence and all of that, the EU was the first to say all gambling services. And so it took a stand right over there. I think even the fact now that we have regional regulation and supervision, I think that is also a benchmark potentially for other regions. So I mean, if I had to go through the package, whether it's that's in the provisions of the directive or in the regulations that we have, clearly there is an approach that is we're trying to meet the highest standards here and to set a benchmark for other countries and other regions to follow. If we look at international collaboration, for example, the collaboration between FIUs, the collaboration between supervisors, the collaboration between beneficial owner registers. So the access to information by one FIU to the beneficial owner register in another jurisdiction. The bank account register requirement and its applicability across the EU, and the sharing of information between bank account registers in different EU countries. So it's all about market confidence, right? So the EU has always been about the single market and ensuring that the regulation instills market confidence. So whether you're looking at market manipulation laws, insider dealing laws, AML laws, it's all instilling confidence in the market. And this is what the EU is clearly trying to do. So in dealing with the emerging threats, right? So virtual IBANs, crowdfunding service providers, crypto assets, the EU is trying to lead the pack and clearly send the message internationally that there's no tolerance from an AML perspective. And I think that it's a trend that has been there for a number of years. As I said, I would say for the past 10 years, and I think we should expect more of this now once AMLA is actually set up. They're going through the recruitment process, and they'll soon have, their offices set up in Frankfurt, and we'll soon have the regulatory technical standards with us, and that is where we will start to see, what the detailed requirements are.
All right.
Lots of fun ahead, I guess.
Yes, it's lots of fun ahead. Thank you so much, Manfred, for this very insightful episode. And I hope our audience enjoyed it and learned a lot of things from it. Thank you once again.
My pleasure.
And, if you have some closing remarks that you would like to share, you might be my guest.
No, I just thank you for the invitation. I hadn't realized that we managed to go on for 40 minutes. It feels like 10 minutes. But no, my closing remark is just that, this is an important piece of legislation for anyone who operates within the gambling industry, especially those that hold licenses within an EU member state. Maybe we haven't heard enough about it within the gambling industry, but the other sectors that have been affected, we've mentioned banks, financial institutions, investment services firms. These are all entities that are looking very closely at all of this because it could be a game changer. So one thing I would suggest is, I mentioned it before, maybe I can emphasize it now at the end, interact as much as you can with your regulators, and there will be consultation periods in which the EU will issue draft documentation, the EU institutions, AMLA among which, first among these, they will issue consultation documents. Some of them, there will be proposed rules that will impact the gambling industry and how the gambling industry operates. And that is where it is important that the gambling operators, either individually or through collective efforts, through lobby groups, will have to interact with AMLA and with the national supervisors to make sure that these rules are not prescriptive in a way that they hinder the actual operations or become inoperable because the way they are promulgated, don't take into consideration the specific nature of the gambling industry. So I would encourage as much dialogue as possible before the rules actually are promulgated, because then it's too late. Once the rules are rules, you need to simply comply. But in the process leading to the promulgation of those rules, as much interaction as possible is necessary to make sure that the way these rules are worded do not make them inoperable for certain industries or certain categories of that industry.
All right. Thank you so much. Make sure to look up Manfred on LinkedIn as well. He's very approachable, and he will reply quickly to your questions. All right. Thank you so much. to our audience, and we will be back next week. Take good care.
Enjoy your summer.
And that's a wrap for this section of Hipther Talks. Thank you for being a part of our journey today. Don't forget to tune in next week for more insights and discussions. Stay connected with us on Spotify, YouTube, Google Podcasts, Amazon Music, Apple Podcasts, and more. Until then, keep exploring and keep growing. We'll see you next time.